Welcome back to Brashenomics, everyone. Joining us now is John Miller, CPA and partner with GDM Private Financial Solutions. And I'm really excited for this segment today. We're going to talk about top mistakes that entrepreneurs make. And, you know, in Seattle, being an entrepreneur and having a small business is a really common thing. We have a lot of thinkers here, a lot of ambitious people. And I think this is advice that a lot of people are going to appreciate. But first of all, welcome, John. How are you?
Fantastic, Heather. It's always great to be on Brashenomics, and good to see you again.
Heathernomics today.
Heathernomics. Okay, we won't tell Ben, but
no, he'll probably listen and be like, "Whoa, whoa, whoa, lady, what are we doing?"
You know what? We had fun today, Heather.
Thank you. Throwing the microphones and everything, but talk to us a little bit about this topic for today. I have to imagine that you've worked with many entrepreneurs on getting businesses going and have seen a lot of mistakes made.
Absolutely, Heather. And you know, Seattle is a great tech and startup community. There are literally businesses starting every day. Mm-hmm. And entrepreneurs always start with the rosy-colored glasses. Things look bright and good. They're going to be the next Google.
It's exciting. I'm starting
wonderful.
a business. I'm going to be a self-made millionaire.
There you go. And we tend to look more at the Learjet in the beginning than we do at the trailer park. But at the end of the day, we got to look at the harsh realities of starting that business and making sure it's done right. So I end up teaching a lot of people how to do their businesses right and how to avoid the pitfalls and what to do so that they have the greatest opportunity for success.
Great. Well, let's just start down the list. Let's just start with some of these mistakes that you are seeing people make one by one.
Well, you know, one of the biggest mistakes I see in the beginning, and it's the attempt really, it's based in a good intention, and it is really to bootstrap, kind of start it from nothing, invest your hard effort and labor, but it's kind of the idea of doing it all.
Yeah.
And it's not a bad thought process. However, Ford doesn't build a car using one person. They use a lot of people. And so sometimes it might mean bringing on a contractor or two.
They invented the assembly line.
There you go. They did invent the assembly line, or at least they initiated using it on a mass scale. And it made Henry Ford a very, very wealthy man. Mm-hmm. And in fact, the idea of dividing up labor really comes back from the book Wealth of Nations by Adam Smith. Mm-hmm. And he showed in the book how a simple manufacturer could improve their productivity by over 4,800% just by dividing up that labor pool a little bit. And, it goes back to the idea of you'd never run an envelope that you had to get to Trenton, New Jersey tomorrow by hopping on a plane, carrying it across the country, giving it to your recipient, and then coming back. You'd use Federal Express or somebody like that.
So basically what you're saying is to either hire people on the team or outsource work when you can.
Absolutely, and as soon as you can.
Yeah.
Because as an entrepreneur, and this probably leads into the next bullet point is, your highest and best use in the beginning is really rainmaking. And what I mean by that is sales and marketing. Mm-hmm. And they're two different functions. Marketing is really the idea of how do you generate people, leads, businesses that want to do business with this new company. And, there are a lot of people,
sorry to interrupt, but a lot of people lump these into the same thing.
Absolutely.
They think it's the same thing.
Absolutely.
It's not treated as two different entities.
And that's because marketing is really the idea of generating a prospective pool of customers, whereas sales is then converting them over, getting them to sign the engagement letter or the contract or the purchase order, and then bringing them on as a customer is more of the sales function. And if we look at them in different lights, then we'll understand how we bring revenue and sales into our business. Mm-hmm. But entrepreneurs, and I even work with a lot of doctors, dentists, and attorneys and the like, and they think their job is delivering health care, doing a filling in a tooth, or maybe their law practice, and that's all fine and good. But I tell them, what would it look like if you could outsource that to another physician, and you go build the kinds of relationships with other physicians that feeds your practice? And you really focus on the rainmaking portion of your practice. I've seen doctors have 3 and 4 and 5 other doctors working for them, and the same for attorneys. And that builds a very healthy practice. Well, we ought to look at that in everything we do, is how can we keep that entrepreneur focused on the sales and marketing, what I call the rainmaking efforts, so that they have the brightest opportunity for success very early on in the business. There's just no compensation for sales or lack thereof.
And when you say, and what do you mean when you say that they don't appreciate sales and marketing? The difference between the two, or investing effort in it,
Well, let's take my own background. I have a master's in taxation. Let's face it, they didn't have any sales and marketing classes in either my undergraduate or my graduate work. Now, I say that tongue-in-cheek. I did take a marketing class. But at the end of the day, when I came out and went to work for one of the largest, it actually is the largest CPA firm in the world, I started selling.
Yeah.
And people kind of looked at me funny, the partners, the managers, and the like. And when I sold a Fortune 178 company, a whole bunch of work one year, suddenly everybody got the idea that selling is pretty important. Now, if you get hired by any of the big four firms, they're talking to you about sales and marketing from day one. And that's a huge paradigm shift in my own industry.
Yeah, absolutely. That's interesting. The next point that you had brought up was accountability on the part of the entrepreneur. So talk to us a little bit about that.
Well, I hear a lot of people say when they start a new business, they say, I don't ever want to work for anybody again.
Sounds familiar.
Yeah. And I always want to understand, where does that come from? Does that come from a bad relationship with a former boss? And sometimes I hear, well, they just didn't like being accountable to somebody. And the truth be told is you have a lot of free time now as an entrepreneur. You can spend your day however you want. And if you're not accountable to somebody, then you tend to not be as productive as you should be. And that's what made you productive, say, if you had a job before and you were an employee. It will make you productive as an entrepreneur. One of the ways we do that as CPAs, a good CPA is a great accountability resource. We actually coach some of our clients and hold them accountable for different sales numbers or production numbers or income forecasts or other things, just because it helps that entrepreneur reach a little bit. And so it doesn't have to be a CPA. It could be a good business coach. There are a variety of professionals that can help an entrepreneur be accountable.
Yeah. I imagine that some people make the mistake of developing a product, putting out a website, maybe doing a couple ads, the company's ready to go, and then they sit back and wait for business to come to them. Like, I did it. Here's my company.
That's kind of the Kevin Costner approach. If you build it, they will come, right? And I see it.
Yeah, there's a million things you could be doing every day and filling your time with to get more business instead of just waiting for it to come, because it might not.
And that's why I say one of the biggest mistakes is going back to the rainmaking thing, not quickly diving into the rainmaking processes of sales and marketing. And some people confuse that with, I've got to have a website up first. You don't have to have a website to go out and start to drum up business.
Do you see people, like I mentioned before, starting the company, putting everything together, and just, there it is, I'm done?
Absolutely. And that's the biggest source of failure almost immediately. I can almost count it as over.
The next point you had on here was more of a focus on profit and loss versus cash flow. So explain that a little bit to us.
That is an interesting concept, because there are a lot of companies, surprisingly, that are very profitable. However, they go out of business. And one would say, how in the world does that happen?
How? They're making money.
Because, and I'll tell you why, is they don't focus on cash flow. And cash flow happens on a daily, weekly, monthly, and in a quarter and an annual basis. When we look at profit and loss, we tend to look at things as they happened yesterday.
Right.
So it's not uncommon for some...
Hindsight, looking in the rearview mirror.
Absolutely. It's not uncommon for some entrepreneurs to figure out what their profit is in their business when they do their tax return. Unfortunately, for some of them, they find out they lost money at that point in time. I have some of those perhaps this year. I don't know. We'll find out. Whereas if you're constantly looking at cash flow, and I mean daily, in our own business at GDM Private Financial Solutions, we look at our cash flow every day. We look at what our receivables are, what's come in, who we need to come in, collect and bring our receivables forward, who we need to pay out, and then we forecast that on a week, a month, and a quarter and an annual basis. If you're not doing that kind of activity, you can be very profitable and still go out of business. And so having an accurate idea of your cash flow is really like looking through a windshield when you're driving, which is a good idea, rather than the rear view mirror. It doesn't mean that when you're driving, you're avoiding the rear view mirrors.
Right.
You have to look through the rear view mirrors, but you also need that windshield.
Right. It seems rather important there.
It does. It does. No question.
Well, joining us again, John Miller, CPA and partner with GDM Private Financial Solutions. Coming back to what you do best, taxes. How do taxes affect entrepreneurs, and where are the common mistakes you see there?
Well, it's funny because taxes have sunk more than one business in my career. I had to sit down an entrepreneur a few years ago and say, if you don't start flying straight, and what I meant by that is, he had accumulated a whole wealth of wealth, what a funny word, a whole collection of tax problems from years before when he was my client. And for me to have a reality check and say, if you don't start flying straight, the IRS or the state of Washington will ultimately shut you down.
Yeah.
Sadly enough, that forecast came true. They did. I have other entrepreneurs who maybe they've been with another tax provider or another consultant, and they did things wrong, perhaps. And then I show them, well, this is the right way to do things, and this is how they would, examine your return. If you were ever audited, this is what would likely happen. And then, also the idea of strategically optimizing your business to take advantage of tax opportunities. There are opportunities that way. But I've had many people say to me, how am I supposed to know all this stuff?
Well, my answer is you're not. Hire someone.
Well, thank you, Heather. You're hired. But, they throw up their arms in desperation and they go, do people really do this? And I say, yes, people really do. And when they don't, and we see it sometimes, when they don't, then the IRS or the Department of Revenue or somebody comes in and they fine them, penalize them, impose greater levels of tax. Things happen that ultimately lead to severe cash flow problems. Now, having a tax problem, there are always solutions. I solve a lot of tax problems for people, mostly because they got into those troubles prior to being my client. But the whole point is we don't have to go there if you assume that you don't know it all in the tax world. And that goes back to your highest and best use is probably rainmaking, not preparing your tax return.
Well, it seems like the early years, too, is when you want to be paying the most attention to taxes and really everything that you mentioned like this, and having accountability for yourself, your role, and making sure you're delegating all the things that you can delegate so that everything goes smoothly.
Yeah, I agree. I think it's just the idea of we're only one person. When we start our business, it's us. Then we go and recruit
they probably want to
other people.
do everything. It's my business. I can do it all.
Yep. And there is that temptation. Even if you could do it all yourself, you wouldn't want to.
No.
Because I know people who make over $1,000 an hour. Ponder that. Because they've outsourced what they're not good at.
Yeah.
Like taxes, like Federal Express, like their graphic design for their website, like even copywriting for the website. They've outsourced literally everything that they don't do well.
So they can pay attention to what
they
they do well.
Do what they do well, and then they get the highest and best return on their time.
Yeah. Well, that's great. Thank you so much for all of this, John. Again, John Miller, CPA and partner with GDM Private Financial Solutions, sharing top mistakes entrepreneurs make. And if you have questions for him or any of our guests today, you can find their contact information on our Facebook page. It's facebook.com/Brashonomics. We're going to go to break, but after break, we're going to bring everybody back on and talk a little more with them. Thanks so much for listening. This is Brashonomics. I'm filling in for Ben Brashen. We'll be right back.